Monday, November 17th, 4:41 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. First trading day of this week has closed. The stock market is closed. It's been closed for 41 minutes. The futures markets will close about another 19 minutes. So since it's the last quarter of the year, and since we already have one solid day, this week already closed, plus we're already halfway through the month. There have been many financial assets in the stock market, company stocks, and institutions that manage other people's money have been doing rotation, taking positions off and putting new positions on. But rotating out of their gains, their profits, and moving into other assets they feel are more growth or defensive. So we'll look at the 5-year charts, weekly candles, and specifically focus on this week's candle, since it's only one trading day so far. See if we broke out of it. To the upside, bullish, to the downside, bearish. Identify where the smart money is going into. So you have the opportunity to do swing trades, dollar cost average on the bullish assets. Everything I'm going to show you has stock ETFs as well as single stocks. S&P 500. Look at the 5-year chart. It's been bullish. We've been in a bullish market for over 3 years. You heard me right. It didn't just start this year as some misinformation of certain political parties, certain media will make it tell you lies that the bullish market just started this year. BS. Call them out on that. Turn the channel. Turn it off. Charts don't lie. We've been in a bullish market for 3 years plus. Solid. Here's the bottom, the S&P 500. Here we are now. Bullish trend. For the week, we already made a lower low. We took out the low of the inside candle of last week. The trend is down. Gap down here has not been filled yet. Again, we already broke the low of last week. That's the S&P 500. The NASDAQ 100 also has been a bullish market for the past 3 years. Currently, it's an inside candle. We haven't taken out the higher low of last week yet. If you don't know, the NASDAQ 100 is inside the S&P 500. And the Dow Jones Industrial Average, 30 companies, it's also inside the S&P 500. It's also been bullish for the past 3 years. It broke the low of last week already. The Dow Jones Transport, 20 companies. It broke the low of last week. It is not in a bullish market. No. Look at these highs from the prior years. The Dow Jones Utility, currently 15 companies in this index. It's also been bullish for several years. It's inside candle for the week. Part of the S&P 500 also. Now we're looking at the Russell 2000. This is not part of the S&P 500. It's smaller cap companies. 2,000 of them. Smaller values of not billions like the ones in the Dow. Yep. So for the week, it already broke the low of last week. Huge sell-off this week already. Yep. Had a short term at the bottom this year. Yeah, so it's really been struggling. Again, this index gets impacted when interest rates, it gets impacted more. The Russell 2000 compared to the Dow Jones. When interest rates go higher, it hurts the Russell 2000 small cap companies a lot more. They are more taking loans out from banks that have much more tougher terms versus these huge conglomerate companies on the Dow have much more muscle. Push. Yep. Again, huge dive on this. So we just looked at the major U.S. stock indexes. That's part of it. Let's dig deeper into the sectors. The S&P 500 has 11 sectors. Technology. Yep, look at this. Just like the NASDAQ 100. Bullish for past several years. Inside candle for the week so far. Healthcare, also inside candle for the week. After that huge move up last week. Again, healthcare, that big move up last week has a lot of new buyers in it. So again, you see smart money coming into healthcare. Huge trading range. Look at that green candle. Yep. This is on my leadership board now. Healthcare. It's a stock ETF. It's one of the big sectors in the S&P 500. Financials broke the low of last week. Yep. This used to be a huge leadership, and now it looks like it's been under distribution. Smart money selling. Expect to have more markdown if that continues. Consumer discretionary broke the low of last week already. Again, all these stock sectors I'm showing you are part of the S&P 500. Communication services broke the low of last week. Industrial broke the low of last week. And again, see this huge consolidation past several weeks. Building a lot of energy. When you see these consolidations, building a lot of energies for a breakout trend one way or the other. There's also a gap down here. I'll label that. Gap has not even been tested yet. Here we go. Two more staples inside candle for the week. Energy inside candle for the week. Again, here's another gap that hasn't even been tested yet. Extend this out more. Utilities inside candle for the week. Real estate, no surprise. Broke the low of last week. And huge consolidation here. This may be distribution. Give you some insight again. Interest rates alone does not entice people to invest or buy real estate. If their real estate assets are overpriced, they have to take in consideration property taxes, insurance. Those have gone higher over the last few years. That makes a high monthly expense for them. So a lot of them will pass on it and just continue living by renting. Again, Federal Reserve is limited what they could do. They only adjust the interest rates overnight lending between financial institutions. When you have other big companies that feel uncertain what the near future is or long-term future of the economy, because you have degenerates running both sides of Congress and both sides of the White House, giving mixed messages every day, every week, every month, you wonder why people are flipping in the markets from one asset to the other. Again, real estate is not the solid asset right now because prices of most homes are not declining enough to make them reasonably buy. So they sit longer on the market. But again, people have money to still invest in other financial assets. I've shown you that in some of these indexes where the money's going. Basic materials broke the low of last week. And again, S&P 500 weekly broke the low of last week. So again, we just saw the major sectors of the S&P 500. We just saw the stock indexes in the S&P 500. Majority of them broke the lows of last week. But we also identified strength in healthcare. Let's go look at the Magnificent Seven. These companies are all in the NASDAQ 100. Some of them are in the Dow. They all are in the S&P 500. Have you heard of this company, Apple? Wink, wink. Broke the low of last week. And look, it's been bullish the last few years. Amazon broke the low of last week. See this orange vertical line? That's when it was added to the Dow. Google, look what it did. All-time new high. Just broke the high of last week. Outstanding leadership. So you got Google, big tech company, up strong. Broke the high of last week. Candle won't be done till Friday, but there was confidence. People felt speculating, buying at these high prices because they're speculating it's going to go higher. Whereas the other stock ETFs, stock indexes, and single stocks I showed you, people are dumping. So again, when the market's down, I'll give you some wisdom. When the market's down, the major stock indexes are down, and when you have a single company up strong, you can look to buy that single company when it pulls back on weakness, if you understand that it's up because of some current news that's got it up. So you can look at, again, institutions that are investing in this. It's public information on the Securities Exchange Commission. See the institutions. It's released every 3 months. SEC website. Meta, former Facebook, inside candle for the week. Microsoft, inside candle. So last week was inside candle. This week's inside candle. That's building consolidation here. Excuse me. So it's got swing points here. I'll discuss this later on. Analyze this. Interesting. Again, you have these big wicks at the high, massive rejection the second time. And then you had the swing low here. Hasn't been tested yet, but this huge impulse move down. So this is building a wedge in here. Yeah, I'll discuss it right now a little bit. It's building a wedge. We'll see how that wedge breaks out. And inside that wedge, it's building a coil. There's a wedge. That's a wedge. Building a coil there, get tighter and tighter. And when that coil snaps, it's going to go one way or the other. Don't be in front or back of a coil when it comes out of the firearms. Safety first. The video. Inside candle. Just like Microsoft, 2 weeks in a row. Inside candles. Again, these orange vertical lines when they got added to the Dow. Tesla. Yeah, underperforming. Still below the low of last year. And inside candle. And like I said, the NASDAQ 100 inside candle. So I just shared you a lot of good insight. Which is the strongest and the weakest. So again, if we're in a bearish market, you look to short the weakest ones. And then you look to not short the strong ones. So many people make a simple mistake. Again, the insight. If you're in a bearish market, you short the weakest companies. If you're in a bullish market, you look to buy the strongest ones on the pullbacks at key zone levels. If you're dollar cost average investing, nothing wrong with looking at the, again, rotating into better sectors, better indexes. I'm sharing this with you because many people are overconfident and stay in the same sectors, same indexes for many, many years, even when it's under distribution and when the time to come retire, they are underwater. Don't marry an investment. Stay on top of it, manage it. Own up, be adult. You work for it, improve it. Thank you as always, spend just a little time with me. That's it for the video. Thank you for watching.